Yeah. Good evening, everyone, and a big warm welcome to Shri Pramod Chandra Modi, Chairman CBDT, Mr. Rajiv Memani, Chairman CI National Committee on Taxation, Mr. Kamlesh Vashne, Joint Secretary TPL1, senior officers from Ministry of Finance, distinguished members, ladies and gentlemen. Every year post budget presentation, CII has the privilege of having the presence of the architects of the budget in an open and candid interactive forum. On behalf of CII, I welcome Mr. Modi and thank him and his team for giving us this opportunity to our members when they can hear your perspective, sir, on the budget and also clarify their doubts and concerns. At the outset, I must congratulate you, sir, and your team for presenting a balanced and pragmatic budget, keeping in view the fiscal constraints in mind, especially in these difficult times. Sir, you have ensured that the reforms that this government is associated with are on track, even though we are in the midst of pandemic. In fact, the finance minister in her budget speech has reiterated the confidence of the taxpayers in the government's focus on ease of doing business in this country. The proposals made in the budget to emanate, actually talks about the mantra of tax stability. Mr. Modi, the various tax proposals announced, whether it is exemption of senior citizens over 75 years or creating faceless dispute mechanism, reduction in time frame of opening assessments, ease of taxing dividend, pre-fill return forms, extension of tax holidays for startups, removing the woes of the double taxation for NRIs. I'm sure these all measures would promote investor confidence, bring in more efficiency, transparency, and increased accountability in this entire system. May I use this opportunity to pledge once more that CI stands shoulder to shoulder with the government in promoting greater compliance from industry. Industry will remain strongly aligned to the vision and will look forward to working with you, sir. With that, Rajiv, if you are okay, then can we request you to give your perspective and then and welcome the chairman. Thank you, sir. Thank you. I'll stop here and over to you, Rajiv, who is our chairman of Taxation Committee.
Yeah, is my voice clear?
Yes, absolutely.
Yeah. Okay, thank you. So welcome, sir. Yeah, pleasure to have you and sorry to keep you waiting. And also on the budget, which has really been very balanced after a long time, no changes in tax rates, and also very clear focus on future growth and incentivizing investments. We truly compliment the government for really not tinkering or not changing, but only instead focused on improving ease of doing business through simplification and putting in place new mechanisms to address the deep-rooted issues relating to tax disputes. These are, welcome features, and also, liberalization of the tax reliefs given to sovereign wealth funds, pension funds, plugging of the gaps in provision relating to business reorganization have been very, very positive. Sir, I would just a few points for your consideration and just your thoughts on that. One was on tax buoyancy. The budget 21-22 envisages a tax buoyancy of 1.2. And for corporate tax collection, the buoyancy is assumed at 1.6. So in absolute terms, the budget expects an increase of 1 lakh crore in CIT collections, from 4.5 lakh to 5.5 lakh. And even for personal income tax, the budget expects an increase of 1 lakh crore, which is from 4.6 lakh crore to 5.6 lakh crores. So given that there are no major changes in tax tax rates and others, and even in the last few years, the CIT has been more stagnant. I think I'm presuming that this would require a very good compliance from industry and also use of technology by government to achieve this. But it will be good to get your perspective. One issue, sir, which is really, there's been a lot of questions in the industries on depreciation on goodwill. The budget proposes that no depreciation will be allowed on goodwill, irrespective of whether it is acquired during business purchase or mergers, demergers. I think, sir, the proposal does need a review, disallowing depreciation even on acquired goodwill in non-tax neutral transactions deprives business of deduction for legitimate business expenditure. It is true that goodwill does not always depreciate, but it is tested for impairment every year, and written off in books, when the losses arise. So even if annual depreciation is not granted, it should be allowed as deduction when it is impaired in books as per the accounting standard. The explanatory memorandum itself acknowledges that there is valid case for allowing depreciation on purchased goodwill. Sir, in any case, denying depreciation on goodwill, whether acquired in tax neutral transaction or especially when it's acquired by actually paying the money with effect from current financial year results in some ways in a retrospective legislation, which has not been the policy of the government thus far. It adversely impacts the entire economics of transactions, especially since the buyer and the acquirer would have legitimately priced the deal on the basis that depreciation will be allowed on goodwill for tax purposes. So CI suggests that at a minimum, the law should be amended on prospective basis to deny depreciation on goodwill acquired in tax neutral transactions on or after 1st April 21. Goodwill acquired in the past in some ways should be grandfathered. The other issue, sir, I just wanted to touch was on tax disputes, and to improve tax certainty and reduce disputes, new institutions have been brought in, and two existing institutions, Settlement Commission and the Authority for Advanced Rulings, are being discontinued. These are welcome measures. One of the important aspects of the success of Board of Advanced Rulings will be a speedy process for admission of cases and time-bound rulings. The members, preferably, sir, if they have exposure to international tax and access to technical units created under faceless assessment scheme, will be very helpful. And most importantly, the ruling should be definitive and complete, and so that the complete adjudication is done. We would also, like to see clarity, whether the ruling of Board of Advanced Rulings will be binding on the assessing officer while making assessment, if neither the taxpayer nor the tax department has appealed further against the ruling. On the new dispute resolution committee, which will resolve disputes other than serious cases like search or survey for small taxpayers in a faceless manner. So this is very welcome, especially after the success of the VSV schemes and with faceless assessments. So, our only request is that the scope should be expanded to mid-sized taxpayers also. The current thresholds of returned income of rupees 50 lakhs and dispute amounts of 10 lakhs should probably either now or maybe at a later stage should be enhanced. And it will be excellent, sir, if this can be constituted at the earliest, so that we can have time-bound resolution of cases, at least for the smaller taxpayers. And so one thing we would like to clarify, can it also look at pending litigation cases, or it will only take the new cases? So, and so finally,
Rajiv, I think it got muted, please. Yeah. We can't hear you. Not really. So, so I think there are some, technical issues that Mr. Mimani is facing. So by the time we will catch up with him, but it's also important to hear. I think while Rajiv was speaking, he was talking about the main areas which we have been getting views from the industry, sir. And it will be important to hear you on this part, listen to you, and maybe in your speech you will be able to address some of these things which Rajiv has already raised. And by the time we may also bring him back, Rajiv, once his technical glitch is resolved. Over to you, sir, Mr. Modi.
Thank you, Tanushree. I think technology helps us, but it also works as an impediment sometimes. Anyway, coming back to the focus area, that is the budget 2021. I think there are some very, very key points which I would like to highlight. To begin with, first of all, I think it is a question of some sort of a certainty which this budget has tried to provide by not changing or attempting to tweak any of the tax rates or the slabs or in any other manner. So that kind of the basic underlying principle of trying to be providing a stable certain regime was the key point. And even where we have tried to amend certain provisions, the idea has been to clarify the issues once and for all, so that the litigation which happens should get minimized and should be put an end to. Another very key area which we have tried to focus on is the resolution of disputes. Just to give a brief background, that initially, if you recall, we tried to raise the monetary limits for which the department will prefer an appeal to the higher forum. That went some distance in trying to reduce the litigation, but we followed it up with certain beneficial circulars where on certain issues we tried to give a clarity that we will be accepting those decisions and no additions need be made on those issues. We carried the journey further by trying to bring in the Vivad Se Vishwas scheme, where again I must say that it has been a great success. We have resolved substantial number of disputes in that, where the disputed amount itself is close to almost 1 lakh crore. So continuing with that series of measures which we have already taken, I think this provision relating to dispute resolution committee or the board for advance ruling or the faceless ITAT, all put together, they weave into that common pattern of trying to bring about some sort of a resolution to the disputes in a more transparent manner, in a more efficient manner, and perhaps a more effective manner. And what Rajiv tried to point out, that whether these would be really very strong and robust institutions which we are trying to build. I think so far as the authority for advance ruling is concerned, you would appreciate that we got caught in the setup where the vacancies could not be filled up and the applications kept on piling up. What was initially intended to be a resolution in advance within a specific time frame got extended much beyond what we could ever imagine. So in order to ensure that there is an expeditious resolution of disputes, we thought of having this board of advance ruling. So far as the dispute resolution committee is concerned, again, our analysis of the disputes in hand showed that majority of the disputes are at the lower end of the spectrum. So that is why the thresholds which have been proposed are what they are. And not gone beyond what was expected, because the majority of the disputes fall in that category. I suppose we can learn from this experience and see how things unfold, and then we can take a call on whether this thresholds need some revision or not. But initially, to begin with, I think these were the thresholds which were thought of. Another area related to the tax certainty which I was talking about was trying to bring about some sort of clarity in the provisions, say for example, goodwill or some areas of equalization levy. All those were contemplated only to try to bring some sort of a clarity and some sort of a certainty to the issues which were agitating both the taxpayers and the department. And also of equal importance is the area of widening the tax base, and that is why we had the provisions relating to TDS in the current finance bill. There is no question of any duplicity or any this thing. It is just trying to complete the circle which we thought would be absolutely desirable. And in this connection, I also would like to invite the attention of the people that we have revamped the 26 AS statement, which now would be nomenclatured as 26 AIS, which would in turn give information about the financial transactions which a particular PAN holder undertakes during the financial year. Apart from working as a sort of a checklist before he files his return, which on the basis of this information, he can fill the returns correctly and properly. It would also enable us to pre-fill the returns to that extent. And this, I'm sure, would not only promote voluntary compliance, but also widen the tax base and maybe in certain cases deepen the tax base. Issues like to bring more ease of compliance or bring about more certainty to the taxpayers, we have attempted rationalization of the entire scenario relating to reopening of assessments. What was a heavily litigated area, we have tried to rationalize it to the extent that it is no longer left to the discretion of the assessing officer. It would be more of information-based attempt to reopen the cases. It would be primarily based on the data analytics and the risk assessment which the system throws up, which would lead to the reopening of assessment. Big change in the period of reassessment, trying to reduce the period from 6 years to 3 years and only in select few cases up to 10 years. I think should be a welcome step for the taxpayers. And above all, the issue which was always being agitated so far as reopening is concerned is the assessee would not know like why his tax return has been opened up again for scrutiny. So we have made a provision for that, the reasons would be disclosed to him upfront. And it's only on the receipt of a non-satisfactory reply or a non-reconciliation of those issues that the case gets reopened, again with a certain threshold. So all these things, if we put together, I think we are of the view that we must provide a kind of a stable and a consistent tax regime to the taxpayers. We should try and ensure and create some sort of an enabling environment where the taxpayer feels motivated to comply with the tax laws on a voluntary basis. And only in cases where serious tax fraud or a serious mismatch is there, multiple flags are being generated by the system, that kind of gets subjected to scrutiny or reopening. So I think the entire endeavor for the department has been to provide to the extent possible as better a taxpayer service as we can definitely provide with the help of technology, and to also ensure that the persons who are trying to game the system are also taken care of strictly in accordance with law. I think those were the key areas which I was wanting to speak to, but now I'm willing to take all the questions, clarifications which the audience might have, and I will be joining in this session with my colleague Kamlesh also. So thank you very much.
We can't hear you, Rajiv. We still can't hear you, but thank you, Mr. Modi. You raised pertinent points that definitely we were all wanting to hear. And of course, there has been some questions posted on the chat board, and over the last few days, like you have been, not able to take a break. Even after the budget, we also have been interacting with industry to know their input. Although there has been stability in the tax regime, but definitely there had been some concerns which Rajiv raised and which you also covered in your remarks, sir. So while we take up few questions, and thankfully Mr. Washney is also there, he could manage some time, although he had a very important meeting which we know. And thank you so much, Mr. Washney, to accommodate yourself in this meeting. So we will definitely take up certain questions which we have got also on the chat board. But I just wanted to say, Chairman, that in CII, we will be also submitting a post-budget memorandum. We would be reaching out to members, take their inputs on the budget proposals that has come in. So maybe some clarifications and some suggestions will be shared with you in the next few days while we get this. So for this question answer session, can I request Vishal to take over, please, so that there are a lot of questions being posted on the chat box. So, Vishal, can you hear us?
Yeah, I can hear you.
Yeah.
Thanks, Tanushree, and thanks coming to this platform and address questions from the various people who have come in here. The budget has really been a positive one, and I think there's a general euphoria around the budget, and I think which is for the right reasons. I think what we are going to talk about here is all the concerns, so let it not be taken that people don't like the budget. I think there are some areas which necessarily need to be addressed. And so before we ask, so there are a lot of people who are posing questions on the chat box. But before that, sir, one important question we wanted to ask was that one amendment which has been proposed in the budget is that the employees' contribution to the provident fund would now be allowed as a deduction only when it is paid within the due date under the Provident Fund Act and not by the due date of filing of the return. The explanatory memorandum seems to suggest that this change will be effective only on a go-forward basis. However, the way this change has been proposed in the relevant provisions of the Act is that it's more a clarificatory, and it was never intended to be allowed on that basis. So, sir, would it be possible for you to clarify what the real intent is? Is it prospective, or it is a clarificatory one, and it goes to the past, and wherever open assessments are open or past years also, this expense will now be disallowed?
Kamlesh.
See, first of all, let us try to understand the logic of this amendment. This is a labor welfare measure, and it is absolutely necessary that whatever money is collected by the employer from the salary of employee must be deposited within the due date of the act under which this amount is to be deposited, because any delay means that it is the employer who is using the money which doesn't belong to the employer, and that is probably not fair to the employee. And therefore, there has to be a provision that money which you are holding on behalf of somebody else in your fiduciary capacity, you should not hold it beyond the time that you are permitted to hold. So that is the logic of this amendment. And now coming to your question, normally this government have taken a view that we will be doing amendment prospectively. So therefore it is proposed to be effective from 1st April 2021. But let's try to understand. You refer to explanatory memorandum, and that is what we have explained in explanatory memorandum, that even the law as it exists today, there is no mention of employees' contribution in section 43B, while some courts have understood that 43B covers also employees' contribution. That is what we have written in the explanatory memorandum. So definitely, I mean, surely we cannot, comment on what courts have decided, but our view is that law as it exists today also mandates that if employees contribution by the employer is not deposited within the date prescribed in the relevant act, then also it is not allowable deduction. Taking recourse to 43B to say that if it is deposited within the due date of filing return, then deduction is allowable. In our view, even the law as it exists today does not allow, because 43B only talks about employers' contribution and not employees' contribution. And that is what we have written in the explanatory memorandum. Now, it is, I mean, we have some cases in favor of the revenue, we have some cases in favor of the taxpayer. So, I mean, it is up to the court to take a view for the past years. But we have made it clear that this has been our view since past many years, and not just from this 1st April 2021. And therefore, the amendment that has been proposed is using those words deemed to never have been intended. So that is why those words are there, because that has always been our intention.
So which means that it can also apply to past cases as well, sir. Again, I think the intention is very clear and the reasoning is fully understood, but the objective was that it is going to be even for past years, because law was always, it's a clarificatory amendment and it goes back to when the section was introduced, right?
Right.
Fine, sir. Sir, again, I think another question, sir, which has come in, which is again a positive step in the budget, wherein the PILCOM ruling of the Supreme Court was negated by bringing in the provision that for FPIs, the provisions of the Act or the rates prescribed in the Act or rates prescribed in the tax treaty, whichever are lower, would prevail. Now, sir, one question which is coming up is that there are various other provisions also in the Act, whether there's a rate differential for specific class of persons vis-a-vis what the rate is prescribed in the tax treaty. Any specific reason that this clarification or this amendment has been brought in only for FPIs but not for other classes of taxpayers?
See, Vishal, first of all, I would like to just comment on that sentence that Supreme Court decision has been negated. So probably, here as a government, as a policymaker, we don't negate any Supreme Court decision. Supreme Court, we respect decision. That's a correct decision. In fact, we have written in the explanatory memorandum that that's a correct principle which is understood internationally, and Supreme Court in PILCOM case has decided correctly what they have decided. But it's a policy call. I mean, government decided that, yes, we know that all the sections which mandates deduction of tax at a particular rate and not at rates in force, then those rates have to be applied and not treaty rates have to be applied. So that is well understood. And given that situation, there was a proposal before the government about section 196D, and government deliberated on that proposal and have moved an amendment in the finance bill. So therefore, that proposed amendment is for 196D. If there is any other concern, I mean, that can be brought to the notice of the government, and it will be the prerogative of the government to decide whether they need to amend the act or not.
Sir, okay, sir, fair point, sir, because I think the reason, sir, was that ultimately the tax treaty anyway prevails over the domestic law. So, while, Supreme Court said something in Pilcom, basically saying that the tax rate has to be based on the domestic law, at least at the withholding stage, and then nobody stops you from applying a tax treaty. But purely from an ease of doing business, wouldn't it be more preferable that if the tax treaty rate is generally applied to every other class of taxpayer, why for these specific cases also, because first the tax will be deducted at a different rate, and then tax returns will need to be filed and refunds will need to be claimed. So why they should not be put at par with other taxpayers who are also eligible for tax treaty benefit?
No, once again, Vishal, I will just repeat the same thing which I said earlier.
Right.
That internationally, it is well understood that tax treaty is to be applied at the time of assessment and not at the time of withholding. But you correctly said that for ease of doing business, in 195, we say apply tax treaty before applying withholding tax rate. Now we have said for 196D. Certainly, government has done this for ease of doing business. If there are any other proposal, it needs to be brought before the government, and government needs to exercise its, discuss those proposals and take a call.
Fine, sir. So moving ahead, so there are certain queries as well on equalization levy. And so this was brought into the Act last year. Again, first levy came in 2016, and then e-commerce levy came in last year. And so the construct of the levy, the way I think it was, the way the provisions were drafted, seemed to give an impression that essentially digital, goods or services are, going to be subjected to tax, and brick and mortar businesses may not be brought within the purview of the law. Because the terminologies which were used was online sale of goods or provision of online services. And so that was one, wording which seemed to suggest that only digital things are taxable. I think now, so your officers have clarified that, in fact, anyone and everyone selling goods or services from outside using e-commerce platforms without necessarily setting up presence in India would now be liable to EL. So that has been now clarified by bringing in relevant changes. So, but there are a lot of taxpayers, who have, followed the mechanisms which were there in the law as was originally prescribed. So, one of the questions that a number of clients have actually come back and asked is that why should this amendment not be from April 1, 2022? And last year should continue to be on the same basis, because that was the law as it was prescribed. So, and before, sir, you react, because there's another question in the same area, that one was also on the scope of what will be taxed. And so when it came to e-commerce operators, which were aggregators or marketplaces, the language earlier on used was that it will be for the consideration received by the e-commerce operator. So the consideration in that situation used to be only the service charge, which a market, place or an aggregator used to charge, and the rest of the monies which were recovered were purely pass-throughs for the goods and services which were transacted on the platform. Now it's been clarified that it is not just the goods and services of the marketplace, but even whether you own the goods or services or not, the gross consideration will be liable to EL. Now that really, sir, changes the scope of the taxation of in the hands of marketplace, because so let's say goods worth or services worth 100 are being sold on the platform, and the commission or the service charge of the marketplace is only 10. In the last year, we saw people paying EL purely on 10. Now the EL will need to be paid on 110. And that really goes to the root of this entire model, because a lot of these models will become either unviable or will require, big modification, because you may end up at the end of the day recovering some of the extra levy from the ultimate service provider in a marketplace model. And the number of players which are really getting impacted are actually the marketplaces. So one was that, sir, is our understanding correct that it will be the gross consideration even in case of a marketplace which will be chargeable now, or it will still be the service charges which he earns? And if the answer is the gross payment is there, should it be not going forward, and not because past year compliances have, or 9 months of compliance has already happened?
Right. So, I mean, I will answer all these questions, Vishal. You have raised two points. I will answer both the points, but I'm a bit surprised that this question is being raised in this forum, which is Confederation of Indian Industry. I thought that this equalization levy is for the benefit of Indian industry, and this forum will at least welcome it and not raise this issue, which does not concern Indian industry. In fact, favors Indian industry. But nevertheless, since you have asked this question, I will answer it. The first point was on what is online activity. See, it's from very beginning, it has been clear that any activity that is performed online would be covered under equalization levy. If you say that all 100% activities have to be online, that means I go online, I book online, I select a product online, I order online, and the product is also delivered online. That will make equalization levy very, very narrow in scope. That was never the intention of the government, and this intention has now been made clear. Now, if if there are grievances that those 2 quarters payments have already passed, and now a non-resident will have to make payment for the past quarters, then whether interest is to be levied or interest is to be waived, that power under section 119 is there with CBDT, and section 119 is already incorporated in Finance Act 2016 as well. So CBDT can exercise power under section 119 for equalization levy. So those issues can be considered there. But what has been clarified has always been the intention of the government. Similarly, for consideration received as well, you know, this word was already there in the act before the proposal in Finance Bill 2021, that the consideration received by the e-commerce operator. Now, how do you say that the pass-through cost of the good is not the consideration received by the e-commerce operator? That's certainly the interpretation that taxpayers have taken. That was not the interpretation which government had in its mind. And therefore, that clarification has been given. So I think it's very clear what clarification government has given to make it very clear, because taxpayer had some apprehension about some issues which were not clear, and government has given that clarity that government's intention was always what has been proposed to be clarified in Finance Bill 2021.
So just one question, and again, this will be relevant because you raised this point that this benefits the Indian industry. So maybe overall, on an overall basis, yes. But sir, one area where it may have some impact within India as well is that what Section 1050 provides is that where the income from goods or services have been subjected to EL, of course, with the exception of fee for technical services and royalties, which has been brought in by the law, it will be not tax liable to income tax. Now, so when we are going through an e-commerce operator, we are assuming that it's not just the e-commerce operator, but also the people who are transacting on the platform, because the EL is being levied now on the gross consideration. So all will be exempt from tax, unless, of course, there's a PE or something in India. So one challenge which is coming up is that on a number of platforms, we have a situation where Indians are transacting with Indians. So today you can on a overseas company's platform book a room in Bombay sitting in Delhi. So so here what is happening is where a service is being delivered from India and it is being consumed within India, though it is transacted on a platform of a e-commerce operator. You know, one is ending up paying 2% EL on the entire consideration. So are we trying to then say that even an Indian service provider who transacts on this platform is now not liable to pay EL? Because that may not be the intent of the law, because at one end we also have a 194O to say that, you know, the e-commerce operator is supposed to withhold tax on, on e-commerce participants. So I think this may be somewhere, it may need some level of a relook or some level of an exception, because a number of platforms now are international platforms are now in India where Indians are transacting with Indians. So maybe that may be something, maybe relooked at.
Yeah, see, Vishal, definitely. I mean, those are the issues which can be relooked, but just one clarification that there is no overlapping between 194O and equalization levy. Equalization levy is on the income of the non-resident who is driving from India by participating in Indian economy, and 194O is tax deduction, which is supposed to be on the income of the e-commerce participants. So, and e-commerce participants will get tax credit when they file their tax return here in India. So 194O is completely different from equalization levy. They don't overlap. But you have a valid point that there may be a situation where e-commerce participants are Indian and their gross consideration gets into the consideration of the e-commerce operator. And these are definitely, there are some issues. I mean, government is not saying that all issues have been handled by this proposal in the finance bill. If there are any issue of these nature, one can always examine them.
Thank you, sir. Sir, the next question, sir, is on goodwill. And I think Rajiv talked in detail about goodwill, and he requested that, depreciation should be permitted. But I think the way that the provisions right now stands, I think a couple of questions people have is that this amendment has been brought in from assessment year 21-22, which means it also covers the current year. So, one of the requests was that people haven't really paid, have factored in goodwill in the income and in payment of advance tax. Like there was an exemption given to dividend, that the dividend tax will need to be paid only in the quarter when the dividends are received. So one request is, can the goodwill depreciation disallowance, if it has to be continued, should it not continue from next year? Because this year's tax calculations, it has already been factored in, or can some other relief be provided on this account? And second, sorry, so maybe you can answer that then, because the second question is more on the mechanism in which this asset has to be deleted out of the block of assets, because it's already forming a part of the block of assets. So there's no amendment which was proposed in 43.6, or no provision is being provided how this asset can now be excluded from the block going forward. I think these are the two questions which have come.
So I think first of all, it is completely the prerogative of the legislature that if they want this amendment to take effect from assessment year 21-22, then this amendment will take effect from assessment year 21-22. But yes, if you have genuine concern that these 3 installments of advance tax have already gone, and while paying those advance tax installments, companies factored in the depreciation on goodwill, then definitely CBDT has power to examine these issues and provide relief. So I will just leave it for CBDT to exercise that discretion. But so far as applicability of the assessment year is concerned, that's the prerogative of legislature. And your second question, I will just say thank you to you for pointing it out. It did come to our notice that yes, there may be another amendment required in section 43.6. And thanks for that.
And sir, one more change. Yes, sir, this year a new section has been brought in that even if the payer or the recipient provides the PAN number, there should also be a requirement to, for the person to have filed the tax return to be eligible for that withholding rate as prescribed in the Act. Otherwise, the rate is double in some situations, or high, or 5%. I think that's prescribed. So, yes, sir, Rajiv, we can hear you.
Okay, fine. Thank you.
So, sir, the question which was there was that because again, I think now all the tax returns are being filed online. So can a utility be provided by the tax department where a person can, the payer can check whether the other person is in compliance or not? Because otherwise it's going to cause a lot of hardship in terms when making the payment, because there will be limited ways for the payers to verify whether the recipient has paid the tax or not, and then more a declaration sort of a thing people will need to rely upon, which may or may not be accepted. Any thoughts on that, sir?
Vishal, on this, Vishal,
yes, sir.
On this, if you recall, we had 194N also, where similar kind of a thing was there, and a functionality has been provided there. And likewise, I suppose we will provide a functionality here also.
Okay, sir. So it will be more a functionality from the department. So it won't be that way a challenge for the taxpayer, sir.
Certainly.
That's the right understanding, sir. So then there are some questions around Matt. I'm just trying to understand the questions and the change which has now been brought in, that if there is any adjustment on account of transfer pricing and the amounts are recorded in the books in the current year, uh, and Matt is payable, then I think what's been provided is that in the so you go back to the past year when the adjustment was made, and you recompute the tax for that year, uh, and the objective is that there should not be any double taxation. So the question which has been asked is, how will this entire mechanism work at a practical level?
So this is going to work just like Section 89 relief works. So basically, it's totally at the discretion of the taxpayer. And if his book profit for this year has increased and he wants a relief, then we put back those increase in book profit to the relevant year to which they belong, and then we calculate MAT calculation just like we do it for area of salary. And if it is beneficial to the taxpayer to roll over the increase in MAT to past years, then that benefit can be given to the taxpayer. We will provide that mechanism, which will be similar to Section 89.
Fine, sir. And sir, second, I think there's another question more around, when we with respect to all these TDS and TCS provisions on the definition of goods. Sir, a position is also now being taken that should this definition be picked up from the Sale of Goods Act or from this, the CGST, because there is some level of a conflict over there. And also, sir, there is also a view being taken among different quarters that even share sale transactions are subject to TCS. Is that a fair understanding, sir?
Yeah, that's a fair understanding, because we have also, through circular, which was issued in the month of September, I think 29th September, we have given concession for listed securities. So that was under the impression that securities are goods.
And sir, would it be possible to clarify, which definition needs to be followed, or can a specific definition of goods be incorporated, just to ensure that the conflict between the Sale of Goods Act and CGST can be taken care of?
Sure, we will consider it. Right. Thank you.
And sir, again, I think there are some other questions more around the dispute Vivad Se Vishwas scheme, where the cutoff date of January 20th was prescribed. So a question which has come up is that now the, let me just read out a little better, that now with the settlement commission also going away, is there any possibility that Vivad Se Vishwas scheme may be extended for giving a greater benefit to the taxpayers, or no such proposal?
No, Vishal, it has already been extended up to 28th of February.
Right.
And I suppose that should be the last extension. The payment date is already prescribed at 31st of March. I think it should remain at that.
So I think, sir, those are largely the questions. I'm just trying to read anything else. So again, I think, sir, one was also, again, I think that was a separate request, which is, again, there is a request from, which I will just read out. It is a request for not levying equalization levy on intra-group transactions on in-house captive digital platforms. Alternatively, collect this tax as custom duty on all import of goods so as to digital way of working. So I think that this is more to do with the intra-group transactions, that again, a number of intra-group transactions with the recent sort of clarification specifically can come within the purview of equalization levy. And so, because there are also a number of situations where global enterprises have databases which are accessed from India, and those are typically charged as a part of management fee. Similarly, so there are central procurement teams sitting in overseas locations where all the procurements happen through those platforms where again orders are placed. So now with the current provision, again, a number of these cases will also come within the purview of EL. So I think that probably the question is more around that can there be a carve out for intra-group companies, intra-group transactions? I think that's the request here.
So Vishal, as I said earlier, that all these issues can be examined by the government, but the real relief would come to the taxpayer, non-resident taxpayer, is when OECD inclusive framework speed up their work and come out with a mutually acceptable solution to tax digital transactions. So I think we should probably hope for early resolution, early agreement on taxation of digital economy. That would be the real relief for all taxpayers.
And so similarly, there's another request here, which is that because of COVID, there's a more than a year has been lost, or at least there's still ambiguity on how the rest of the year pans out. So can there be any scope to extend the target date for start of commercial production for a new manufacturing companies by 2 years? Under 115 BAB, this is a request which has come from one of the participants.
I think nothing for the moment. I think wherever the dates had to be extended, we have already done that. Say, for example, affordable housing and everything. But in your memorandum, you can include this. We can examine it when they come.
And then, so finally, we will also make one more request. I think that request has been made that, sir, regarding the SEZ units, there was a request made that last year was the, March 31st was earlier the, grandfather date for start of commercial production in SEZ for a tax holiday. Because of the COVID, this period has been was extended. But there is a request for a further extension because there are a number of facilities, at least we know of in South India, which have actually come up. But because of restrictions on travel or transfer of technology, they haven't necessarily been able to commence. So there was again a few representations have gone wherein a request has been made if those days could be extended up to March 31st to enable some of these facilities to come up. So we will maybe reiterate this request and with the specific cases where the representations have come in. Let me see.
Okay, Vishal, if the questions are over, I think both Chairman sir and I have some other engagement. So if you still have something, one of our colleague, Vipul Agarwal, he is a director here in TPL, he would remain here and would answer your question. But if you permit, both of us can take a break.
Kamlesh ji, thank you so much. Sorry, there was some problem with my computer today. Yes. But Mr. Modi, thank you so much. Kamlesh ji, thank you so much for spending the time and answering the questions in a very, very forthright manner. Really appreciate it. And once again, thank you very much for an outstanding budget. So if I look at the flow of the questions, I would say the two things that are coming, which are, and I know Kamlesh ji has responded to this, but on the goodwill side, I think if it can be done on a prospective basis, I think that will be something that would really appreciate if you can look into that. And again, not part of the budget, but something which I wanted to say at the introduction time, but couldn't. The APA pendency, sir, is if we can really strengthen that, I think that will be, if we can strengthen the APA entire body that you have internally, that pendency is really creating some noise amongst all the people who are looking at some resolution of those issues. So really appreciate if you can look into that. It's not part of your budget this thing. And the third is that a lot of these non-residents who are stranded in India, the number of days clarification. I know you will be coming out with that soon, but if you can come out with that faster, it will be helpful because a lot of people are on their edge right now. So if you can come up with that at the earliest, that would be a request, sir.
Rajiv, we have noted these points. I think let's see how fast we can come to some understanding on that.
Yeah. Thank you, sir. Very, very kind of you. Thank you, Kamlesh ji. Thank you so much. Thank you, sir. Thank you.
Thank you.
Thank you so much for coming to CI platform. Thank you.
Thank you.
Thank you.
Yeah, so I think Mr. Vipul is there, Rajiv. We have few questions. I think one of the question which unfortunately, because of the time constraint, we couldn't ask Mr. Washni and the chairman. Maybe Mr. Agarwal, you may like to respond to this. The thing on the provident fund that one will be taxed on the employee's contribution. Will it be on the prospective, or is there any concern on is there any chance of the retrospective taxation also? So I think that's one of the questions the members are asking. So it'd be good to have your views, please. Mr. Agarwal, you may need to unmute yourself. We can't hear you. Mr. Vipul? I don't know. Yeah. Can you hear us, Mr. Vipul? Well, I think there is some issue in the connectivity of Mr. Vipul then. So, we did invited CBIC, officials, but unfortunately there is some urgent meeting that is happening at the same time and we could not have some. But I would request Uday Pimprikar, who also heads up the GST core group of CII, just to say a few words, Uday, and then, I think we will reach out to the members to take their questions pertaining to customs and the GST procedural thing that were announced in the budget, which we can take forward. Uday, over to you, please.
Thanks, Tanushree. I have kind of taken note of the questions that have come about. And let me just quickly kind of highlight these questions. And these questions, by the way, if you write to us, we'll anyway go ahead and have a meeting with the policymakers and pick those up. But let me just kind of quickly pick up those questions. One aspect that has been brought about is this entire amendment to the CST legislation, which restricts the concessional rate of tax against Form C to only inputs that are used, petroleum product inputs which are used for manufacturing or resale of petroleum products and alcohol for human consumption. So that's something that I think appears to be a policy decision, but we'll pick this up because this is going to be a major impact on procurement cost for a number of people, especially, I mean, some of the infra sector, steel, power, telecommunication, all of those people. It's a major impact, so we'll pick that up. The second line of questions that I've seen on this is the relevant provision under section 16(2). The questions have come actually for 16(2)(c), while as of course there is another amendment that has been inserted in section 16. But let's talk about the issue right now that has been raised in the questions. The question, as I understand, appears to suggest that the provision 16(2)(c) suggests that credits can only be availed if taxes are actually paid by the taxpayer or the supplier. Okay, credits can be availed by the recipient. And how does a recipient identify or get some amount of assurance that the taxes have been paid in relation to these receipts or inputs received or input services received? And the question suggests that while GSTR1 reporting gets reflected in 2A or 2B, GSTR 2B, the GSTR 3B filing is on a consolidated basis. So the assurance that one can never get per transaction. So conceptually speaking, we will pick this up, and if please do write to us if there is anything specific that I'm missing out on this. But conceptually, the way the entire work process works is like this under the GST compliance. GSTR 1 gets filed, which gets reflected in 2A or 2B, as we now know. Okay. GSTR 3B is to be GSTR 3B is to be filed on a consolidated basis. You're right in a sense that the GSTR 1 or 2A 1 number and the GSTR 3B number may be different to that extent. But GSTR 3B, basically you can't short pay or part pay. And I think traditionally people have taken the decision that a 3B filing is an adequate assurance that whatever has been filed in GSTR 1 has been paid for. But your assessment is right, and but this is an issue from day one, and this is how I think even the department is accepting it. But if we will pick that up specifically, the second amendment that has been proposed in the present budget and in relation to this input credits is the insertion of section 2AA. Basically, what that section says is, the insertion says is that credits will now be availed or available, okay, only where the transactions have been reported and on the relevant portal, and the transaction has been communicated adequately to the recipient, right? So these two conditions have been incrementally added. How does this impact us? So this entire gamut of whether this is a condition precedent, how do we kind of go ahead and get that assurance? Do we have to do the reconciliations on a real-time basis, or can it happen after some time? And what happens to Rule 36(4), whether this will survive this amendment, is something that I think we will pick this up with the department as a specific representation. To my mind, the generic view would be that if 36(4) remains, it will need to be read harmoniously with the existing sections of existing 16(2) section, and along with this insertion that is coming. And to that extent, this should be available. Of course, reconciliations have now become mandatory as we speak. The third set of questions are on the rebate amendment to Section 16 of the IGST Act. Primarily, the questions that have come up is into the fact that now rebate would be available only to a notified class of tax payers and notified class of products. And should somebody be required to kind of go ahead and do something to get the person included in this rebate activity, we'll be asking this. From whatever preliminary discussion that at least I've had, it appears to suggest that they want to continue with rebate as a policy measure, especially given that the refund option related to exports is a fairly constricted option. You don't get if you compute the refund as per the equation kind of defined, there's a lot of credit refunds may not be available. And to that extent, I think the government realizes, so at least from the look of it, it is not as if the rebate is being kind of sought to be struck off. This has been included primarily to perhaps deal with a lot of litigation that has been triggered off related to Rule 89 and 96 in general. And we'll see where that goes. But I think it's to do with that. But this particular question will pick it up and try and kind of get back to all of you as to what is being suggested. And the last set of question is in relation to PV manufacturing in the PLI scheme. I think it relates to the announcement that for solar, it's going to relate to a phased manufacturing plan is being proposed, and whether PV manufacturing would be identified as an adequate or a activity for being eligible from PLI. I think that a lot of discussion is going on the PLI related to solar, module manufacturing. I think by various ways and forms, I think the policy will require, or the material amount of value addition um, to be for a manufacturer to be eligible for PLI. And to that extent, perhaps cell manufacturing might also be required to be one of the eligible, uh, activities for PLI manufacturing. But a lot of discussion is happening around that. I think we'll come to know more about it in the next few weeks. So those were the broad questions that have come up. We have conceptually put out some other sets of issues to be considered by the policymakers. Let me just quickly run them through. If there are any other questions that I've missed out, please do cover and get back in general. But so let me just see whether I can just quickly present this. Yeah. So let me just put this down. Some of it we have already discussed. I think, I mean, the big aspect that another change that has come up is the, let me just see whether we can. One big aspect that has come up is this entire review of customs exemptions, and the fact that conditional exemptions will be available only for I mean, would survive 2 years and then would be looked at unless renewed. I think this is going to create a bit of uncertainty, and we will go back to the government to kind of understand what is the overall framework that is being put in place. The other announcement that was made is that as many as 400 conditional exemptions are going to be looked at and reviewed in October, and I think detailed industry consultations will happen. Of course, CI would be a part of these consultations, but again, we'll try and understand more as to with regard to what is the framework that is going to be applied out there, and talk through it. Of course, clarity on what's going to happen to exemptions under FTA. To my mind, those should continue, but I think again, we'll get those clarifications as we go along. The second bit is, I mean, getting more clarity on the digitalization framework that has been announced. What's going to happen when, so that the industry gets adequate time to align with it. I mean, basically, the background is that they have created or notified a framework of creating a common customs portal to kind of carry out tax administration and compliances the way we have for GST. Now, what's going to happen on that front, I think, is something that we'll want to get more clarity as we go along. Then the third bit that came about is on this entire anti-dumping duty and countervailing duty. One aspect that they have brought in is that they've clarified now with a specific insertion that procurements by an SEZ or an EOU would be exempted from anti-dumping duty, CFED, or safeguard. But if the product is, or the article is resold into the DTA or used as input, and the final product is then supplied into the DTA, the supply, the import would be eligible for, would be liable to an anti-dumping duty. I think there has been some amount of inputs that we've received, or recommendations that we've received, that it might be useful for allowing SEZ units on par with foreign suppliers, and so if the final product is different than the input, maybe with some value addition norms prescribed, then the SEZ unit or UE unit should not be disadvantaged vis-a-vis foreign suppliers on this count. So that's something will get picked up. We talked about the 16(2) AA, and I mean, just one incremental point there being that bona fide recipients or should not be penalized for compliance errors and non-compliances by suppliers. So that again, as a kind of point, will get picked up as we speak. And on the refund claims we covered on the rebate side. Again, on the punitive measures that have been added, I think the general consensus that we understand and the industry has been talking about is that there is a particular asymmetry that has been set now over the last year and a half, with a lot of changes that have gotten into the GST, where punitive action, unilateral punitive action can be raised, and that the balance needs to be brought back, wherein some amount of guidelines have to be put in place so that these enabling powers can be applied with some amount of sensitivity and judiciousness. So that's something that we will possibly engage with the policymakers. On basically 96B and the amendment that has been brought in 1660 of the IGST Act, again, that's something that that will pick up, basically saying that bona fide exporters should not be imposed with an additional burden of paying back refunds if there are delays or bad dates, delays in payments or bad dates on account of foreign markets, on account of the global pandemic that everybody is kind of experiencing. So that's something that will get picked up. Now, there were some other areas that we had already kind of put in, but I think I will let go of that. Are there any other questions that I've missed? Please do let me know. We can pick those up at a later date. Right.
So thank you, Uday. I think that was quite exhaustive, like the way you have captured the thing that has come for announcement. Definitely, we'll reach out to the members for their post budget, and we'll be getting their inputs. We'll be also trying to seek interaction with the CBIC, as we could not do so today. So with this, I would like to conclude, but I'll just take a last chance to see if Mr. Vipul, are you still connected? Is it possible for you to speak? Then we'll just put a question to you. Otherwise, we'll just conclude the session. Mr. Vipul? I think then there is a IT glitch still that he's experiencing. But thank you so much, everyone, for participating. And at a very short notice, we would like to continue the engagement with the officials of Ministry of Finance and reach out maximum with our recommendations. So once again, thank you everyone for participating and joining today's session. Thank you.